Hello traders, and welcome back to our channel. In this video, we're going to break down the shadow diver strategy inside TWM. This strategy is a price action system designed to catch momentum reversals around moving average levels. It combines entry confirmation with risk management to create a structured trading approach. Let's see how it works in practice. The shadow diver strategy revolves around a single moving average. The system waits for specific price action patterns, where price closes above the moving average for 3 consecutive bars, while the low of the current bar dips below it. This creates what we call a shadow, a temporary rejection of the moving average that often precedes a directional move. The strategy enters on the breakout of this shadow, using a stop market order placed slightly above the most recent high or below the most recent low. For long entries, the system looks for 3 consecutive bars where the close is above the moving average, the open is above the moving average, but the low drops below it. This pattern shows buyers in control but willing to absorb selling pressure. Short entries are the inverse: 3 bars with closes below the moving average, opens below it, but highs pushing above. This shows sellers maintaining control despite buying pressure. Once these conditions are confirmed, the strategy immediately places a stop market entry order slightly beyond the previous high or low, depending on direction. When an entry fills, the system immediately calculates and places 2 exit orders: a stop loss order at your calculated risk level, and a profit target order at your calculated reward level. If either exit triggers, the opposing exit order is automatically canceled. If you're in a long position and price closes below the moving average, the trade automatically closes at market prices. Similarly, if you're short and price closes above the moving average, the position is exited. Now, let's explore the settings that make Shadow Diver work. Position size determines how many contracts are traded per entry. Period sets the length of the exponential moving average that powers the entire system. A shorter period reacts faster to price action, while a longer period filters out more noise. Adjust based on how responsive you want your entries to be. Entry offset represents how many ticks away from the key price level your entry order is placed. This prevents your order from triggering on exact touches of the moving average, which often produce false signals. Keep order bars defines how long your pending entry order remains active before automatic cancellation. A lower value means more responsive setups that expire quickly. A higher value gives you more patience to wait for the signal to trigger. In the exit settings section, you define how profits are taken and losses are limited. Stop loss percent sets your protective stop as a percentage of your entry price. This is how much you're willing to lose per trade. Profit target percent sets your profit goal as a percentage of your entry price. This works together with your stop loss to create your risk to reward ratio. Both your stop loss and profit target work together. When the price hits either level, that exit order fills and the opposing exit order is immediately canceled. You can customize these parameters based on your market and time frame. Test different period values, entry offsets, and risk-reward ratios to find what works best for your trading style. That's the full breakdown of the Shadow Diver strategy and its settings. Thanks for watching, and we'll see you in the next video.